Hello everyone, this is Ryan Mallory for SharePlanner.com, and it's the weekend, April 22nd, 2012, and I just wanted to go over some of the more popular charts that are seem to be traded, that I get the most requests for, and just go over the technical analysis of each one of those. So first off, let's just go ahead and take a quick look at Apple here. You will see that with Apple it had that undeniable upward trend that went on for most of this year, and I had said before when it was on this trend that it was very unsustainable. It couldn't stay at this kind of a angle. 45% or a 45-degree angle or more, usually those trends break down pretty hard and fast, and that is exactly what we had with this stock here. But now that we've seen it decline about 10% off of its all-time highs at around 644, it's now at 572, and what concerns me is the potential for this to go much lower. So by simply drawing a horizontal trend line, you will see that it broke a major level of support on Friday. So the next, if you're shorting this one, I would say that you could see in the next target for Apple around 548 to 550 or so before it finds some more support. But in the meantime, too, don't be surprised with a steep decline going from around 615 or so all the way down to 572 if we don't get a bounce back up to, I don't know, let's say it gets back up to the little over $600 there. So that is very, very possible that we see a bounce in the coming days that takes us right back up to that level. Then after hitting that level, it comes right back down. So Apple, it is definitely seeing a lot of people jumping ship. A lot of people had. It's a weird thing when people buy a stock, and let's say they bought it, before last quarter's earnings, and they had this explosive growth from, January on, where it's going from 425 all the way up to 644, and then all of a sudden now it's already back down to 577 or so, or 572. What happens there is that so many people get nervous that all of a sudden that their 3 months of work, going from low 400s all the way up to the mid 600s is all of a sudden, dropping at an incredible clip, and so that belief that nothing was ever going to stop Apple from going up is now turned into, I'm going to lose everything that I've made in this. So it's like selling, perpetuating, selling, perpetuating, selling. So for me, I definitely think, regardless of what you think of the fundamentals, and you do have earnings on Tuesday, which could create a problem for the stock too, because frankly, and I don't know what their earnings are going to look like, if they're going to meet or exceed, earnings, or completely miss them. But you got to ask yourself, how in the world could they beat the earnings from the previous quarter? I mean, those were just phenomenal. So that's the questions probably going through a lot of traders' minds right now, that, I'm not going to hold through earnings only for it to lose, get a haircut of another $50, and then all of a sudden I might be sub 500. So I think there's a lot of emotion in this trade right now, which is creating the huge sell-offs, the huge bounces, and everything else. So I'd be careful. You know, I don't know how far this thing's going to fall, but I would let price settle a little bit before trying to jump back in too quickly. And let's check out some others. Let's check out GLD actually. I haven't talked much about GLD in a long time, but right off the bat, kind of stuff that sticks out to me the most on GLD is this downward trend line that we've been in, plus the series of higher lows. So let's just connect those real quick here. So then what you have is this mega triangle that has been created over time, going back a good 8 months or so. But now, and you have trend lines all throughout this thing too that you can keep drawing. I mean, you have them from March onward, and then you could say that you have this little channel that it's been trading in inside there. Um, what I would watch in the coming days is what does this thing do if it hits to about 158 or so. Because around 158, this thing could get very bearish very fast. Because then all of a sudden you're looking at target prices of possibly 148. If it really starts, dropping off a cliff, maybe even like 144. So be very careful about trying to hold long. It's okay to go long off of a test of the support level, but if it breaks the support level, I would not be holding it any further. So you do have the opportunity for a very tight risk. You could get in right now and you'd have a risk of maybe like $1.50 on $150 stock. So basically like 1% that you could lose on the trade. I think that's worth taking to see if it can bounce, even if it only bounces up to like 165 or so, or to some of the resistance that we might be seeing, around 163 to 165 or so. So I would think that you could take this trade long, but be willing to flip the trade short if it breaks below that 158 level. So, and let's see here. Let's take a look at SLV. And you know what? For the purposes of this discussion, I want to look at it from a weekly chart. Alright. This thing's been all over the place on the daily, and I think it would do us good to get some perspective from a weekly angle on this one. You can see why, outside of this little crazy spike that we had back in February, January time period, this is in a pretty solid downward channel here. It's got a little bit of a narrowing going on, but I don't think it's enough to call it like a bearish or a bullish wedge or anything like that. But and then in the middle of it, you could say you have this little bounce here, and then this little flag-like little pattern. So if you took the action from here, this line from here to here, and we're able to take it away, like I'll go ahead and do it. You could say you have a little bit of a bull flag pattern here, but in the grand scheme of things, in the bigger picture, it's up against a pretty heavy resistance level coming off of the highs of May from last year. So this one I would not be getting long on. In fact, I would say you probably, to the exact opposite of gold, you have a pretty convincing argument to go short, because if it doesn't go your favor, you could get stopped out at, say, 32.25 on this SLV ETF, and it's currently at 30.75, so you're looking at probably about a 5% stop loss on this. So maybe you could wait for it to get closer, maybe get a little bounce in the coming days. If equities and commodities decide to rally together, then you could probably get a little bit closer to that $32 level and go short and see if if you could ride this sucker all the way down to maybe, that would be a pretty steep level, but if you could get around 28, that would be more than 10% on the trade. So I think that one's pretty enticing as well. And let's look at crude. Look at it first of all from the commodity side, from the futures contract. And you can see here too, like silver, that you have a downward resistance level on the weekly chart. Now, let's go ahead and look at it from the daily too, though. On the daily, you can see same kind of downward action going there. So pretty heavy resistance at that 110 level, 109. And right now you have a bit of a sell-off going here in the very short term. So let's look at this one in further detail, because with this sell-off you have, whoops, a bear flag pattern emerging. So what do I think? I actually think that you could see a nice little sell-off and in the coming days, especially if equities remain weak, because if you remember the last time that oil started going really crazy, it was back in this April time period from last year, and then boom, we got a pretty nasty sell-off, and then then again last summer. But I would say if it does break out of this bear flag here that I just drawn for you, look for I would probably put a stop somewhere around 103. I would get in. I would put my entry somewhere around. I would want to get in probably around 102.29 shorting this, and then my targets would vary at around 97. And then 94. Whoops. So those would be my two price ranges, and you can draw the same thing using like a USO. Price action is pretty similar. See there, you still have that bear flag right here, so you could no doubt short that, put your target prices in around 37, and then again at 35, and then have a stop somewhere probably around 30. Let's be a little bit looser with our stop loss on USO. We could probably go be like 40.09, and an entry. Let's go ahead and just draw this resistance so I can eyeball this better. But you could probably put an entry at 38.90. So we get about another 1.5% drop in oil. Then all of a sudden you got a confirmed bear flag pattern, and then you're off to the races. And a couple others too. And then I'll wrap up this chart session here. But TVIX, holy cow! And UVXY, same thing. These suckers, I've played them before and I've regretted playing them. Because you look at them and you look at the balances, you get the ebb and flow for it, and you think, man, I think I could profit off of this. But it is very, very hard. What you need is something that, like what happened back in August, to be able to jump on that kind of a massive sell-off, because then you do make a lot of money off of it. But anytime though where you're taking like 2 steps forward, 1 step back, or two in this kind of a stock, you're going to lose money, because that 1 step back is more like 2.5 steps back, and ultimately it's even if the market only goes, because this goes up when the market goes down. So say if the market takes 2 steps back and then it bounces 1 step, well, it's going to be more like a 2.5 step bounce in TVIX or UVXY. So I don't recommend playing them, but I know they're popular, and I don't mind charting them just for charting them, but I highly recommend not playing them. Here you just got a perpetual downtrend, and you've had a little bit of a flattening in recent days. So you could make the case that this thing is just about ready to bounce here, but even the charting's messy. I just wouldn't play. I mean, I could chart this thing 100 different ways, but it's not going to. In fact, I'm going to delete this one because I don't like that line as much. But you can see here, you have a perpetual downtrend since January of this year, and finally, just recently, has it broken it with the weakness in the markets. But look at this thing. This thing's still moving lower despite the market being at the cusp of breaking its bear flag. So I wouldn't touch this thing, guys. I'd move on. There's trading in the stock market is not a get-rich-quick scheme, and stocks like, or ETFs, ETNs, whatever you want to call them, like UVXY and TVIX, they promise the trader the whole get-rich thing, but it never comes to fruition. So I would stay away from them. And finally, I'll do an Amazon chart just because a lot of people like to chart Amazon. Here we go. And what I would point out in Amazon, and this is probably better to look at from the weekly point of view, is this bear flag pattern, similar to what we're seeing in the market. I would say that the bear flag in Amazon is much better defined, and it comes after a much steeper sell-off. So coming off of August, we go all the way down to 161, so it drops like $80 a share. I mean, we were talking about a big sell-off in Apple, which trades at 640, being like, $70 a share. This thing is like a third of Apple, and it has dropped $80 a share from its peak to the lowest point here. So this is a really easy trade, and would definitely recommend it. It hits 181, I'd go short. That's probably about 5% away, and if you wanted to get in early, you could probably do that in order to have to play with a tighter stop loss. But 195 would be my target, or my stop, and then my target. And this is for people who don't mind holding their shorts overnight, because this thing is not going to get there in a day. And it's probably going to take like a bad earnings report or something else to get it down to this 150 level. But I can definitely see, though, where over time this thing does test that level. Now, if you don't want to hold a stock that long, you got other options. You have, I would say, this 167 level is a possibility. With that, though, I'd probably, just to make risk a little bit more in your favor, tighten the stop loss a little bit. Maybe get in a little bit closer to 185 or so to try to short. And I definitely like this as a short play. I don't see any opportunity from a balance perspective on a weekly chart. Perhaps from a daily chart you could make that justification. Here on the daily, you have that same bear flag that we're talking about, but I really don't like Amazon from a daily perspective either, or for a long trade. But it could be done. It might work. The only way that I would do it is testing this bottom channel here to see if you could get it to pop maybe up to 200 or so before selling out on the stock. But overall, like I said, on this weekly chart, I think it tells you right there that even if it's bullish on the daily, with how bearish it looks on the weekly, that's telling you right there you're not trading with all the factors going in your favor. You don't have a clear-cut edge, because the weekly is showing you that the longer time frame is very bearish for Amazon. So I'd keep that in mind. I think that it goes much lower, and I'd play it that way. All right, that's going to do it, and I'll be in the chat room on Monday.